Most beginners mess up when actually drawing trend lines, which is a major problem in the aspect of making trading decisions. In this video, I'm going to show you how you can draw a trend line and use it as a powerful tool to make certain decisions that will give you profits and make you be consistent in the market. One thing you want to know is that this video, we are going to keep it real and we're going to keep it as practical as possible. I am D from DFX Mentorship, where we teach students and 9-to-5 workers how to actually trade smart and not hard. So let's dive straight into what a trend line is. What is a trend line, you might ask? What is a trend line? What does trend line literally do? How do you see them in the market? And so on and so forth. Now, a trend line actually connects lows and highs in the market. So we have lows, and we have a high. So when it is actually in an uptrend, in a sense, the market is moving towards the upside, we can easily connect the lows it creates while it is actually moving up to the upside. If market is coming to the downside, we can easily connect the lows, the highs, that it creates to the downside. One of the major purposes of trend lines is that it helps you to know the direction of the market, helps you to understand the strength of the market, and also it helps you to know potential reversal points in the market, which is a very vital point in trading this financial market. And in this video, I'm going to be showing you how to draw trend lines without you forcing them and understanding that you can make profits without forcing trend lines. Now, one of the major ways at which you can connect your trend lines is basically just being able to draw your trend line from a particular low to another low. Okay, now these lows can actually be connected just like this. I'm connecting from this low here that was created to this low and then to this low. Okay, so that's just all I'm going to do, just as simple as this. Now, there are two ways at which you can connect your trend lines. You can connect your trend lines by actually connecting body to wicks, body to body, or wicks to wicks. Okay, so now for this particular trend line I just drew, I just connected wicks to body, and then that's just it. So if you look at it carefully, you will see that this particular first point here at which we started from was actually a wick. If you look at it carefully, let me zoom in. You can see a wick here, and then we connected it down to a body here. As you can see, this is a body, no wicks there. Then you can also see that we connected to a wick here, then a body. Okay, so this is just how simple it is to draw a trend line if it is in a case of an uptrend. Okay, in a case of a downtrend, you can also still connect your trend lines in cases of downtrends. Now, downtrends is when you have lower lows and lower highs. Okay, lower lows and lower highs. So let's look at this chart here. Okay, so I can see a downtrend that actually took place right here, as you can see. Then I'm just going to go ahead and take this from here and then just connect to the downside. Okay, now why was I really careful? I'm trying to make sure that it's actually cut across to be able to touch this particular point in the market. If that point fails, then I would actually have to delete this trend line and then withdraw it again, which is one of the reasons why you have to be very, very precise. Okay, you have to be very, 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 very precise. So I think this is the perfect trend line here. This is the perfect trend line here. Now, this particular trend line now will actually take me to how can you actually execute a trade using trend lines. Taking it from this point, this particular point, to this particular higher low, to this particular lower high, pretty much, and then to this point. Okay, and then we can see that this is a breakout of the trend line to the upside. But before that breakout, we can see that from this beginning here, price pushed to the downside, came back to it, pushed to the downside, came back to it, then pushed to the downside. Okay, and then at this point, price failed to actually push to the downside. Now, that will tell you that the very first way you can trade a trend line is through breakouts. You can trade a trend line successfully through breakouts, and you can also trade a trend line through bounce off. Okay, so just like what happened here, you can see our price actually bounced off the trend line, immediately tapped into it. If by adventure we add this first touch and this second touch at first, then we now actually came ahead expecting price to come again to touch the trend line and bounce off it, which is what it did exactly here for this particular downtrend. If we are to go back to our uptrend, if you have to go back to our uptrend right there, you'll be able to see that if by adventure we actually connected this point to this point, then to this point, we would have waited for it to actually come again to give us another touch and then bounce off it again, which will now tell us that okay, we have one touch, two touch, three touch, then the fourth touch is where we are actually expecting price to push up. So now, how can you actually use this particular knowledge practically? Okay, practically you can go ahead to the lower time frame. You can use it on 5 minutes, 15 minutes, whatsoever minutes you're fine with. Let's take 5 minutes for an example. This is currently what is happening on gold right now. You have to be stylish about it though. You can be stylish about it. So let's look at this current market price. Let's look at this. I'm just going to connect this low to this low, and then let's see. So with what is currently happening in the market, we can see that it is easy for us to say that this trend line acted as the first touch, the second touch, the third touch, okay, and then the fourth touch. What happened? The fourth touch couldn't push price too much before we saw a breakout. So if we were to trade this, we would have traded it based off of what? A breakout strategy. Okay, so now what will determine if you want to trade it when it bounces off, or if you want to trade it when it breaks out? That's where candlestick confirmation comes in. Number one candlestick confirmation you want to pay attention to is bullish engulfing or bearish engulfing acting off of a trend line. Okay, they actually tell you that okay, at this point in time, price could no longer go below this trend line at this point. So if we zoom in carefully, we can see on this particular third touch here that we have here, you can see that what we had there is a bullish engulfing. Okay, can we see this particular zone? So this particular zone here, we had a bullish engulfing. So after this bullish engulfing, which is the third touch on this particular trend line, that's a very good confirmation. Then we take a buy here, put our stop loss slightly below this low, and expect price to push up and give us 1:2 or 1:3 weeks to reward. So let's take a look at the sell opportunity, right, which is what I'm seeing right here. I can see a sell opportunity from this point to this point. You can see this is a body and body weak body trend line. You can see, how do I mean body weak trend, body weak trend line? You can see I connected from a body to a body and then to a weak. You can see it is not touching the body of the candlestick, and then to a body. Can you see that? So that tells you that what if you actually came into the market and then you saw this bearish engulfing, then you would have taken what? A sell immediately. Put your stop loss slightly above this high, and then put your take profit 1:2 or 1:3, and then you would have made the profit. So most beginners also actually tend not to always look for other confluences to their trend lines. Okay, so when you have mastered this trend line, you also want to understand that you want to have other reasons to why you are taking this trade. Okay, your trend line has to be, if it is a major tool you want to use, a major technical analysis you want to use to trade, then it has to be the number one. Then number two, you could add your supply and demand, or you could add your support and resistance. Number three, you could add Fibonacci. Number four, you could also add major rejection points, as much as that's what I do. So pretty much that's just going to be it, guys. Thank you very much for sticking all up to this point on this particular video, and then don't forget to actually do what? Don't forget to like this video if this video has helped you. Share it with another beginner trader, and turn on the notification, because I'll be sharing with you forex tutorials that will actually help you as a beginner to make good profit in this market. See you next week, guys. Bye.